Welcome to Money is Freedom, a podcast exploring how finance and freedom connect in our lives. Created from thoughtful research and narrated by Notebook LM AI, this series brings you clear, meaningful insights into finance and beyond.
Welcome to episode 42, where we provide an overview of Warren Buffett's life and legacy following his announced retirement. We touch upon his humble beginnings and long career building Berkshire Hathaway, his investment philosophy centered on value and long-term holding, and offer life lessons gleaned from his quotes. We also examine some of Buffett's acknowledged mistakes and controversies, reflecting on his influence in the digital age and the enduring impact of his mindset and principles.
May 3rd, 2025. That date really marked something in the financial world.
Oh, definitely. Warren Buffett announcing his retirement at 94.
Exactly. It felt like, well, the end of an era, didn't it? He's been such a constant.
More than just a constant. I mean, not just a financial giant, but almost like a teacher, a grandfather figure for many investors.
Yeah, a symbol of patience,
Yeah.
Principled success.
Absolutely.
So in this deep dive, we want to unpack all the reaction, the coverage around his retirement, really dig into his legacy, the wisdom, maybe even the mistakes, and try to see what it means for you listening right now.
Right. How do his principles hold up today? We've looked at news reports, analyses, his own words, obviously.
Lots to cover. Okay, so where do we start with someone like Buffett? His beginnings, maybe?
I think that's perfect because his origins are so distinct.
Yeah.
Omaha, Nebraska.
Right, not Wall Street, miles away from the usual financial hub.
Exactly. That challenges that whole image and his lifestyle, too.
Oh, absolutely. Famously simple, the McDonald's breakfast.
The cherry Coke. For decades.
Driving himself to work, even late in life, it paints a picture of someone incredibly grounded despite the immense wealth.
You really get that sense. He even said, I tap dance to work every day. You feel that passion, don't you?
You do. And that started early, buying stock at 11 years old.
11. That's just, wow. And the pinball machine business he started as a kid?
Right, those early ventures. And then the really pivotal part, studying under Benjamin Graham.
That was it. That's where value investing, that core philosophy, really clicked for him. You could say that was the foundation.
And built on that foundation.
Yeah.
Well, look what happened. He took Berkshire Hathaway, this struggling textile company.
Yeah, failing, really.
And turned it into this colossal trillion-dollar holding company. It's almost hard to fathom.
It truly is. And the core idea seems simple, almost deceptively so.
Buying good businesses at fair prices.
Holding them forever, basically. And living below your means. Simple rules.
We see it in the big holdings, right? Coca-Cola, American Express, more recently Apple.
He had this knack for spotting what he called economic moats.
Explain that a bit. The moat idea.
Sure. It's like a castle, with a wide moat around it, hard for enemies, competitors to attack.
So a sustainable competitive advantage, something that protects the business long term.
Precisely. That's what he looked for. Business is built to last.
Okay, so that's the investing side, hugely influential. But his wisdom, it kind of spread beyond just finance, didn't it?
Oh, definitely. A lot of his quotes, his life lessons, they resonate much more broadly. They're about life, really.
Like, the best investment you can make is in yourself. That's universal.
Totally. Continuous learning, self-improvement. That applies to everyone, whatever you do.
And the one about reputation. It takes 20 years to build a reputation and 5 minutes to ruin it.
Oof, yeah. That's a powerful reminder about integrity, how fragile trust can be. It's strategic, almost.
It puts things in perspective, long-term perspective again.
And his view on inheritance is interesting, too. Leaving kids enough to do anything, but not enough to do nothing.
Right, fostering responsibility, not entitlement. A tricky balance.
Very. Then there's the classic investing one, but it applies elsewhere, too. Be fearful when others are greedy, and greedy when others are fearful.
The contrarian approach, having courage when everyone else is panicking, or caution when they're euphoric.
Exactly, independent thought, which connects to the saving advice. Don't save what is left after spending, spend what is left after saving.
Simple, but so fundamental for financial health. Prioritize saving. Pay yourself first, as they say.
It's foundational. And this one about habits is quite profound.
Which one?
The chains of habit are too light to be felt until they're too heavy to be broken.
Wow, yeah. That really hits home. The power of small, consistent daily choices. They add up.
They absolutely do. Which might be why he also said the difference between successful people and really successful people is that really successful people say no to almost everything.
Focus, saying no to distractions to concentrate on what truly matters. That's hard to do today.
It really is. There are so many demands on our attention.
And linking back to investing, but broader too. If you're not willing to own a stock for 10 years, don't even think about owning it for 10 minutes.
Commitment again. Whether it's investments, projects, relationships. Think long-term.
Any valued good company. You want to associate it with people who are better than you are.
You see that in his partnership with Charlie Munger, right? For decades. Finding people who challenge and improve you.
A great point. And finally, finding meaning in what you do. Find the job you would take if you didn't need a job.
Finding that alignment between work and passion. That's the dream, isn't it?
It really is. Okay, so we've talked about the successes, the wisdom, but it's important to remember he wasn't infallible. He made mistakes.
Absolutely. And acknowledging that is crucial, I think. It makes him more relatable, and it highlights the importance of learning from errors.
Right. It shows humility. So what were some of the notable stumbles?
Well, Dexter Shoes is often mentioned. He bought it, paid with Berkshire stock, and it didn't work out. He called it a huge mistake.
Paying with stock, that became incredibly valuable later, right? Big opportunity cost.
Exactly. Then there was an energy bet, ConocoPhillips, where the timing on oil prices wasn't quite right. And interestingly, even buying Berkshire Hathaway itself, he admitted later it was partly an emotional buy, maybe not purely rational at the start.
That's fascinating. And of course, the big one people point to is tech.
Ah, yes. His self-professed tech aversion for many years.
Missing out on Amazon, Google, Facebook, and their early explosive growth phases.
He did, though he eventually came around to Apple in a big way. But he owned the earlier misses. He said something like, I've made some dumb decisions, but I learned from them.
And that honesty is key, isn't it? Learning is the payoff.
For sure. Now, beyond investment mistakes, someone this prominent inevitably faces scrutiny, controversies even.
Right. And it's worth touching on those for a balanced picture. The Salomon Brothers scandal back in '91 comes to mind.
He stepped in as interim chair to clean things up after a bond trading issue. He's generally credited with saving the firm's reputation. But some critics question the oversight before the scandal broke. Was Berkshire, as a major shareholder, paying enough attention?
Fair question. And then later, the 2008 crisis, Berkshire invested in Goldman Sachs.
Right, during the depths of the crisis.
Right.
Which was seen by some as controversial, given Goldman's role in the events leading up to it.
People felt it maybe clashed with his image of promoting ethical business?
That was the argument some made. Then there have been questions about board governance at Berkshire itself, maybe not enough independent voices, too insular.
Okay.
And more recently, his relative quietness on ESG issues, environmental, social governance, especially climate change, social justice concerns, topics that have become really central for many investors and the public.
He didn't really engage much in, PR battles about these things, did he?
Not really. His style was more to let the results and his actions speak for themselves generally. Less about spin.
Okay, so let's pivot a bit. How does this figure, this seemingly, analog guy, how does his wisdom fit into our super fast digital world? Seems like a mismatch almost.
It does on the surface, yeah.
Yeah.
But maybe that contrast is exactly why his ideas are more relevant now.
How so?
Well, think about the noise. Constant notifications, 204/7 news cycles, market volatility driven by tweets. Buffett's emphasis on patience, on tuning out the noise. That feels like a refuge.
Like an anchor. Yeah, I see that.
And his focus on durable businesses, those economic moats. Maybe the type of moat changes in the digital age, network effects, data advantages, user habits.
But the core idea remains the same, finding businesses with lasting power.
Exactly. The principle endures. And think about market psychology. We see meme stocks, crypto frenzy.
Right. Huge volatility based on social media hype sometimes.
Buffett's insistence on rational analysis, on understanding the business you're buying, not just the stock ticker, that provides crucial emotional discipline, emotional sobriety, maybe.
So looking past the hype to the fundamentals.
Yes. And fundamentally, tech changes how we do things, but often not what we need or desire. Connection, value, efficiency. Buffett focused on businesses meeting those core human needs. That focus transcends tech cycles.
So even though he might have been late to some specific tech stocks, the underlying principles, clarity, patience, simplicity, they might actually be vital for navigating the complexity of the digital age.
I think so. It offers a counterbalance. a different way to think about value and time.
Okay, so looking ahead, he's stepping down as CEO, but not disappearing entirely.
Right. He'll be non-executive chairman. And Greg Abel is stepping fully into the CEO role. A huge responsibility, obviously.
No kidding. But as a lot of the commentary suggested, Buffett's real legacy isn't just the money Berkshire made.
No, it's deeper than that. It's the mindset. That steady, humble, long-term, optimistic approach.
Staying grounded even amidst massive success. Seeing money as a tool, not the end goal. Vision over velocity, perhaps.
Well put. Vision over velocity. He provided, as One Piece put it, a kind of North Star.
In a noisy world, yeah.
Yeah.
Guiding principles, wise choices, long-term commitment.
And we know about his plan to give away his fortune, the Giving Pledge.
Which is incredible. But in a way, he's already given so much through his example, his teachings.
Absolutely. The wisdom itself is a massive contribution.
So maybe a final thought for everyone listening. As the Oracle of Omaha steps back from the day-to-day, how can you, in your own life, maybe step forward with a bit more of that clarity he championed?
Yeah, or more kindness.
Yeah.
More long-term thinking. In your work, your decisions, your relationships.
Taking inspiration from those core principles we've talked about today, something to think about.